Hello Market Club members, Adam Hewson here coming to you from the digital studios of Market Club. Well, it's Friday the 18th of November and we have some very interesting markets going on right now. You probably heard the news that came out today that Ford is not going to be relocating one of its plants to Mexico. And I think that's kudos to President-elect Trump on that one. I think we have to start manufacturing and making things in America again. I think that's what is important and not being a service economy. The markets have responded to that over the last week or so with President-elect Trump's victory. And we have markets, with the exception of the S&P, all of them are pretty positive. So the S&P is the only one that has the monthly, which is right here, still in a negative mode. We're looking at the S&P 500 index right now. But a really interesting tool that you may want to look at if you haven't used it before is the parabolic stop and reverse. It's called SAR. We call it stop and reverse. And you can just click on this and just leave it on the default, which is fine. And you can see these little dots, here, these little purple dots on maybe a different color on your screen, but once the market moves over there, it means the trend is up. Once it moves below there, it means the trend is down. It's very, very simple, but it definitely can help you. You can expand this out. It definitely can help you keep in tune with the market. The problem is with this one indicator is when you go into a trading range like we have right here. That's when it gets to be very choppy and expensive, and that's when you need some other indicators to look at. But nonetheless, for the most part, it's a pretty good indicator and it can help you steer clear of some of the major problems in the marketplace. You can see right here it got out very nicely, the market dropped dramatically, and so forth and so on. It's not a perfect indicator. There's no perfect indicator. Well, maybe the trade triangles are, but certainly the parabolic, the SAR, is a very good thing to follow. So let's take a look at the Dow. Well, the first thing here, you can see we're in a very strong upward trend. We've just basically been consolidating here the last few days. You can see we have had the big move up over the parabolic right here. The trade triangles kicked in right here, another good indicator. And we sort of just been doing this type of thing. This type of formation usually leads itself to another move to the upside. All of our trade triangles are green, even though it registered red here. It's because we've had a very unusual monthly, we've had a very unusual movement where we've had a monthly come in and a monthly come in later in the month, indicating the trend had reversed and gone back up. It just hasn't shown up on here yet. So again, trend is up in the Dow and it looks like it wants to go higher for now. The big winner this week has got to be the NASDAQ, which is up I think 1.8%. And you can see we've had a reversal there where the weekly kicked in and the monthly also kicked in. That's a new high for the NASDAQ for the year and for a long, long time. So again, the trend is very clearly on the upside and it looks like it wants to go higher. So let's see how that plays out next week and for the rest of the day. If we're looking at December crude oil, as you can see, December crude oil, again, this parabolic worked really well. You see the market moved below here, had a big, big drop. And it is sort of basing out a little bit. It's come back up and it's turned around according to the parabolic, not according to either the RSI, which we want to see over 50, or our weekly trade triangle, which remains red. We want to see this go turn green. But our daily, right here, the daily trade triangle has turned green, indicating you should be on the sidelines. If we put those, you can see, just put that in, you can see it turned green right here at 44.63. And the market's at 44.99. So again, it's turned neutral, so you should be on the sidelines in this position, but nonetheless, it looks as though we're trying to base out in this market and move a little bit better, maybe sideways. But again, one thing to look at is we did have a slight divergence. The market made new lows here, but didn't do that on the RSI. Something to pay attention to. Let's take a look at gold now. This is December gold, and as you can see, it has just been basically moving down. All of our trade triangles are negative and have been negative for some time. The last signal we had was actually today, coming in at 1,213 to be short. Market's currently trading at 1,206. Not a good sign, especially for the weekend. If we scope this out further, let's say a couple of years, and we're just down here towards, let's take the triangles off, make it a little simpler, but certainly we're down here again towards this, these lows, which are really going to be broken. If we break below here, we could be looking for a very serious move to the the 1,050 level. I know it sounds crazy, but that's where it could potentially go, because if you've left, what you're looking at potentially is a very large top here. And what I'm looking at is right here, and the potential for a complex head and shoulders. If we scope this right around here, we can say we've broken through there today. This may be a very good one for the 52-week lows, and it would indicate a move from this point here down to this point here, and that's approximately, let's say we'll call it 1350 down to, let's say, 1200. So 350 points. That takes us down, well, it takes us way down here, so way down here, maybe even new lows. So nonetheless, the trend is clearly down, and that's what you should be looking at right now. It may see some bounces, but the trend, there's no reason to step in front of this market right at the moment. So one thing you want to look at on a Friday is the 52-week highs and lows, and you do that simply by going to our smart scan, and you just go to 52-week highs right here. There's 497. Click here once, and here are all the highs. Now you may want to just exchange that. This is the ASX, so that's Australia. We're not going to trade in Australia right now because it's closed, but we want to look at the US exchanges, and we want to look at daily volume over 2 million. And let's see, the last price less than $20, just for fun. So we scan. Now remember, we had 457, so we're going to scan this again. And here you have his Marvel Tech. That's new highs, 52-week highs. That's a very low price one. I don't want to trade that, of course. And here's Huntington Bank shares. Melcro Crown Entertainment, these are all good shares making new highs. So the idea would be find a market that's making its highs close to the end of the day, or closing at or close to its highs for the end of the day. Take a position and then take profits on Tuesday morning on the opening. Okay, if the market opens lower sharply lower on Monday, just exit the position. You're wrong. Okay, take the loss. But nonetheless, it's a very good way to find winning trades for the weekend. There's a good one there. Sirius XM Holdings, it's really good, and Dana looks very good too. So let's see how that plays out. But I'm Adam Hewison from Market Club. Thanks for stopping by. Thanks for watching this video, and thanks for your business, and have a great weekend.